Holy moly, meme stocks. Talk about a crazy day in the markets. But if you weren't looking at meme stocks and you're just looking at the indices, it was a flat day. This is the Daily Stock Market Brief show. I do this Monday through Friday, 5 days a week. We use technical analysis and intramarket analysis to get a good idea as to where the market might be headed next. Without further ado, let's hop into today's episode. All right, everybody, welcome back. Check this out. This is the 5-minute time frame for Bed Bath & Beyond, only up 62% today. Meanwhile, AMC was up 95%. And SKLZ, 26%, just a cool 26. BB, no big deal. BlackBerry up 32%. What is going on? Jeez, this market is absolutely bonkers. There is going to be some damage done in the streets with these type of gains. You would think that this would be great and everyone will succeed, but trust me, there's a lot of money being passed and forth, back and forth, and unfortunately, a lot of people get hurt during these times. A few people make some big bucks, and that's awesome, but just be very careful in these environments. Overall, indices have been relatively flat, and don't feel the need to just jump into these last minute. Okay, because if you jump into stocks like this last minute and you're trying to chase it a little bit higher, there's definitely more risk to the downside than there is reward to the upside. So yeah, FOMO, it's a real thing, and people really do this. I mean, you can see this upper wick here on BlackBerry. Those are buyers. People are buying that. Somebody top ticked BlackBerry, and I kid you not, it's not a professional buying up in here. Same with SKLZ. There's buyers and sellers, right? There's buyers that are here. It's absolutely crazy. Now they might get bailed out and the stock might go higher, but you never know. Bed Bath & Beyond finished pretty much at the highest tick for the day, so that's pretty crazy. And then also AMC, not too far off of it. I mean, it doesn't look like it on the 5-minute chart, but from this little point to down here, I mean, that's a $10 difference. So there are people that bought up here and got stuck. So just be very mindful, okay? Focus on the risk first, then you start looking to the reward aspect. You want to know how much you're willing to lose before just jumping into anything that can just completely destroy a portfolio. All right, if you had some good gains here, like many people did, in the Discord chat, I mean, there's some people that were making some great money today. So, that's awesome. But if you maybe got some gains, or even if you didn't, don't feel the need to rush in to try to chase anything. I can't say that enough. Let's look at the market dashboard. Energy leads the way. You can see here relatively flat in the overall markets, and then we have materials down there at the bottom. So kind of just a mixed board. Nothing crazy to really report. Energy did really well as oil continued to press above this resistance, so that's doing good so far. It is at the early stages of breakout. Perhaps we continue that move. Gold is relatively flat on the day, up slightly. It is moving into its 26-day trading cycle as the price percent oscillator is crossing over. That's from Tom McClellan, that 26-day thing. So I'm trying to track it here as we've tracked previously, and it's worked quite well. Meanwhile, gold tried to make another breakout. This is so weird. It tried to make another breakout today, and you can see, I don't see these type of candles often at all, really. And we just got a couple back-to-back here. You can see just this shot up and then whoop, quickly rejected right back into this pattern. So perhaps this is an important little pattern. I haven't seen it out in the Twitter sphere, so I don't know if anybody else is watching this rising wedge, but still, this could be potentially bottoming out. And I know that the dollar is a heavily shorted. There's a big short position in the dollar. And the thing is, if we start basing out or moving higher and they decide to cover, well, then you have a breakout. You have more buyers coming in, and you have momentum buyers, and then you could potentially see this thing really move higher, which brings down the overall market, but it hasn't taken place yet, so nothing to really worry about there. Bitcoin, I'm taking a look at this pennant pattern. Many people are watching this pennant pattern right here. It is crossing over bullish on the price percent oscillator, but it is well below zero. If we start breaking out to the upside of this, we still have the 200-day up there and this previous resistance zone at 42.5. But if we really do get a clear crack, I mean, 47.5 to 50,000 would be the next real resistance, that kind of zone up in there. So it's a possibility, but it hasn't done anything quite yet. It is still within a bear pennant formation. So don't get overly too excited or, just speculate a breakout without the confirmation of one. Meanwhile, the sell signal just crossed over the bottom red line, which is the quote unquote, now I'm just giving it a little bit of a warning sign. When it crosses back through, the 10-day moving average crosses back through 0.8, that is the sell signal. Last time it did it, it played out quite well. As you can see, we fell down and then we started going sideways. Oh man, what time is it? It's 5 o'clock. I'm supposed to be somewhere right now. I'm gonna go ahead and try to get through this a little bit quicker. Here's the NIMO. The NIMO is not overextended, but it is getting there. This is a really overextended reading, 60 to 80 range. But it does sometimes get a little too frothy right around 40, so it's something to be mindful of. Meanwhile, the VIX is in a flagging formation. The risk to the downside in the markets is a breakout of this flag, but as it stands right now, it's still within this technical pattern. Meanwhile, the S&P 500 continues to drag on sideways, but it's still an overall bullish context as it's trying to trade up in this higher range of resistance. So just really nothing. And you know what's crazy? This is the 15-minute time frame. We are now looking at, actually, are we looking at that many gaps? Yeah, so 9 gaps, 9 straight gap ups. So let me see here. Yeah, 1, 2, 3, 4, 5, 6, 7, 8, 9. Yes, we've had 9 gap ups so far in the S&P 500 in a row. 9 gap ups. That's crazy. It's not rare at all. Maybe we can get a 10th, maybe we can't, but we really haven't gone anywhere. We're still, in this risk zone right here. I move this up to 419. I say if we crack down through this, we might go test a little bit lower here and fill this gap. But the resistance is at 421.50 to around 422.50 on the S&P 500. And, benefit of the doubt goes to the bulls because of the overall context on the daily time frame. The 5-day moving average is relatively flat here, but the bulls do have control of it at the moment. Small caps trying to press and break above this symmetrical triangle. Haven't done so yet, but if we do scroll into the 15-minute time frame, it is forming this descending triangle. It looks like it wants to start pressing up through it. There's an inclining 5-period moving average, so the bulls have control of that in bullish context, as this is really just going sideways in an area of resistance. So no tradable actions as of right now, but it does look like it has the possibility to go breakout and try to retest these highs at around 235. And then we have the BKX. The BKX we talked about the other day. It's still within this little flagging pattern. This could be the pull. Now it's flagging still above the 5-day moving average and this little previous breakout zone. So, if we start breaking out, that can press it higher, which can very well help the small caps, as we know, because small caps, 20% of the IWM is made up of the financial sector. Here's the Qs. Qs, not doing much here. Still sideways, slightly up on the day. Overall in bullish context, and as we're trading around this upper range of resistance. When we zoom into the 15-minute time frame, we have the 5-day moving average overhead. So, this is not necessarily the greatest sign, as we have resistance at 335, and then we have the 5-day moving average right above us. It did break out of this to the, went up a little bit, but then curled back down and then acted as support for 332. So it's relatively in a tight range here. It's range bound. So if we start cracking down through 332, perhaps we come fill this gap right here at around 327 to 329. Not a lot of stuff going on in the markets. Semiconductors make up a big portion of the composite, NASDAQ composite. This could be just an up channel or a potential bear flag if it's still trying to form here, but the bulls still have control as it stands. The 5-day moving average is sloping up and the price is above there too as well. So everything looks fine as of now for the semis. Dow Jones Industrial Average also not doing much. Overall context is bullish. You have the 20 sloping up, the 5 sloping up, the 50, the 100, and the 200 as it just grinds away up here. So nothing, once again, just nothing taking place in the major indices. Price percent oscillator does look like it's crossing over, so benefit goes to the bulls here. Then we look at the DIA on the 15-minute time frame. Little wedge taking place right here, pennant. You can see just how tight it's coiling up here. So it looks, if we start breaking out of this, perhaps we go take out this previous high right here and go try to attack that 348.50 level right there. Overall, still bullish context. 5-day moving average is sloping up and the price is still above it. Got a couple gaps below us as well. If we start cracking down through this lower portion, we still have an upsloping 5 moving average and this gap right here. So there's a lot of support right here in this little zone. And then just below that, we have some You can see this sideways consolidation with the volume bars too. So there's a lot of support right up in here. So it's going to take, a forceful move to the downside to really crack that down. And the last thing is the transports. Transports did have a down day, almost down 1%. We talked about this bear flag, and we said if it broke down, it could come fill this gap. Well, look how perfect this was. Boom, broke down to the downside, filled the gap, and it just pretty much is just forming this little cliff formation here. Could be flagging again. So something to watch for if we break down again. Well, then we head lower to test 15,475. But if we start breaking up to the upside, we could just very well see a boom, like a big, strong move again. It's always possible. All right, everybody. So that's all I really have for you on today's episode. Let's wrap it up all together. First off, to me, what I'm seeing out there, it seems like a lot of, I guess, just a lot of unwinds, meaning that we're seeing a lot of short squeezes take place, a lot of covering, a lot of volume coming in to various stocks. And then on top of all of that, we're not seeing really any movement in the indices. So are we seeing this very slow, rotation back into these momentum stocks? Very strong possibility. Are we unwinding and moving into a risk-off scenario? Also very likely. We have to watch it day by day. As it stands right now, I'm looking for just very strong setups, and I'm very aggressive as of now taking profits, because I know this is a very, very similar thing that happened in 2020. 2020, we saw a relentless grind in the S&P 500 and various indices, very similar to this, just kind of grinded higher, and then it got, just very complacent, no movement for a while, and then out of nowhere, it was just a shock to the system. And it would be very healthy to get a pullback to, say, the 100-day moving average. That's right around 4,000. So if we can get down there, it's going to set up some excellent opportunities in the markets. Now, we're seeing some great opportunities in various stocks, but like I said, you just need to be very careful with that. If you miss it, you missed it. Move on. Don't hold on to that and be like, oh, if only I did that, if only I did this. Because when you think like that and then you start looking for stocks where you can then try to approach it the same way that previous people approach these meme stocks, and if it goes the wrong way on you, then you typically find yourself into some trouble. All right, I'm rambling on, but you just need to be, like I said, I say it too often, too frequently. This is a game of managing risk. The goal is to be here for a long time. It's not to blow up your portfolio or get rich overnight and then try to get rich again when you start seeing your account balance dwindle and then you blow up, your portfolio. So just think about that when you're pressing, how many shares you want to buy or how many option contracts you're buying. If you're really willing to risk, X amount to earn X amount. Yeah.